All right, very interesting. Next vlog, I think it's the 7th of June. I'm still in Playa del Carmen and still in my deep dive. Markets are down 30% from all-time high, and I'm digging right now, trying to build my watch list. Because remember, Warren Buffett said that you only need 20 companies in your lifetime. 20 companies in your lifetime. Like, think about it like you would build a list of punch cards. You have a punch card with 20 holes in it, and every hole is representing one company. And I feel like a lot of people got this wrong, where they think that you need to make decisions on a daily basis, or you have to act very quickly, and nothing couldn't be further from the truth. Because actually what you're trying to do, you should have the mindset like you're searching for companies that you want to partner up with for the rest of your life. And this is the work, right? So I think if you would respect Warren Buffett's advice and you would only pick 20 companies for your lifetime, you would take very, very, very good care of the companies you're going to partner up with. And not a lot of people are willing to do that due diligence, right? To really dig in deep and really discover all the ins and outs of a company. We are following like a 4-step process where we discover the circle of competence. Pretty much we try to find out if the company we're interested in is in our interest, right? And usually I make a 3-circle exercise where you find out if the company is maybe something you have talent in, maybe something you spend money on, like if you could check in your balance sheet and your bank statement if you maybe a customer of this company. And the third thing is if you maybe work with this product or with this service or software or whatever. I have been digging deep into Netflix lately, and pretty much finished my analysis. Also invested last month or the last 2 months. For now, closed the books on that investment, and now I got on the radar Salesforce. Salesforce had phenomenal growth over the last 20 years, and I will be sharing my research here on this YouTube channel with you guys. Other than that, yeah, like I said, if you decide to do value investing or stock picking, I highly encourage you to do the due diligence, to really do the work. And pretty much when you go through this 4-step process, like I said, circle of competence, moat, management with integrity, or margin of safety, it's a 4-step process that goes very deep. And what most people do not understand, if you didn't check off the first 3 steps, it's almost impossible to come up with a margin of safety price, with a buy price to buy the stock for. It's almost impossible, because in order to evaluate a company, you have to distinguish or come to a conclusion for the growth rate of the cash flows. And this is only possible if you did the first 3 steps, right? If you really understand the company, if you know it has a competitive advantage, moat, and if you know that it has a management that you can trust, and it's capable, and it's capable to get the company where it needs to be within the next decade, right? And only if this is really at place, and if you really understand the first 3 steps, well, then you're finally able to come up with a intrinsic value. Otherwise, it's very risky, very, very risky, and I would not do it. My mentor even told me not to even invest one dime if I didn't do the work that it's necessary to pick individual stocks. Lately, I've been talking to friends, clients who are thinking about indexing, and let me tell you this, indexing is dead. Why? Because the markets are so expensive right now that it's very likely that you see a small return, or nonetheless a return that's very, 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 very bad. And because we are such an expensive market, and Wall Street is a little bit fooling you, because they pretty much said that you can beat the market or have a annual rate of return of 9% just investing in the index. And this is simply not true, because Wall Street and picked a certain time window to support their argument. And if you just Google no return long-term, or no returns, or zero return long-term passive investing, and then you will see charts that show you, if you look over the long term, let's say 100 years, there are multiple moments in time where if you invest in an index or in the market, you make no return, zero, niente, nada. And this is very dangerous. It's a very dangerous place to be. And in my opinion, the market is as expensive as it's ever been, very expensive. And therefore, you, in a little sense, have no other choice than in learning how to do this, because inflation is rising. And remember, inflation is like the compounding interest in a negative way. And if you don't want to fall prey to that, well, then the only solution is to take matters into your own hand and learn how to invest. And well, I'm still helping friends. I'm still motivated to help you. So if you feel like you need help, please reach out to me. Subscribe, like this video, share it if you like, and I see you in the next one.